am Jayasudha, Assistant Professor of Commerce CSL, V.V. Vanniyaperumal College for Women, Virudhunagar. In this video, we are going to see the topic average due date in financial accounting. First of all, we should know about the meaning of average due date. In business, there are various transactions in various date. The total sum of transaction amount is paid on which date. For this purpose, we have to see on which date we are going to pay the amount. If we pay the amount on the first date means it will affect the payment party, and if the payment is made on the last date means it will affect the receiving party. It should not affect both the parties. For this purpose, we have to find the balanced date. That date is called average due date. The average due date is the equated date on which single payment is made in lieu of numerous payments on different dates without any loss to either party. Next, we are going to see the calculation of average due date. For calculating average due date, first we have to calculate the due dates for each transaction. The following steps are to be followed. The first one is add the credit period on the relevant date with 3 days of grace. The relevant date in case of bills of exchange may be the date of the invoice. Second one is if the date of maturity falls on a public holiday, the previous working day will be considered as the due date. Third point, if the due date is announced as an emergency holiday, the subsequent working days are taken as the due date. Next, the process of average due date calculation. The formula for calculating average due date is base date plus total product divided by total amount. We have to keep in your mind few points in our mind. That is, first thing is selection of base date. As per your convenience, you can select any due date between the first and the last as the base date. This need not be the first transaction, but is advisable to choose an earlier due date. There are a certain number of intervening days between the base date and the due date of each transaction. Here, always ignore the first date but include the last date. Next is, if you obtain the due date in a fraction, always round it off to the nearest whole number. Remember to include the calculation of rebate when the amount is paid before the due date. Similarly, including the calculation of interest for payment amounts after the due date. In case of the sales of goods by two parties on different dates, the formula for the average due date changes. Let me see one example sum. So here, Kannan purchased goods from Raman, the due date for payment in cash being as follows. So in March 15th, he want to pay the amount 1000. The due date is 18th April. Second thing is April 21st. He has to pay the amount is 1500. The due date is 24th May. Next is April 27. The amount is 500. The due date is 30th June. Next is May 15th. The amount has to paid is 600. The due date is 18th July. Raman agrees to draw a bill for the total amount due on the average due date. Ascertain that date. In this sum, we have to find the base date. So, in the sum, 18th April is the first due date. So, we are going to consider the base date as 18th April. Next thing, we have to provide 4 columns. In first column, you have to write the due date. In second column, amount. Third column, number of days from base date. Fourth column is product. So, first column, we have to write the due date. First one is 18th April. Second one is 24th April. Third one is 30th June. And fourth one is 18th July. In amount column, first one is 1000, second 1500, third is 500, fourth column is 600. Number of days from base date, how we are going to calculate means, base date is 18th April. So, 18th April to due date is 18th April. So, there is no base number of days. So, there we have mentioned 0. So, in product column, 1000 into 0, in product column we have to write the number 0. Second thing, base date is 18th April. From 18th April to 24th April, we have to calculate the number of days. Like that, if we calculate means there is 36 days. So, amount is 1500. If we multiply by 36 means the amount is 54,000. Next, 30th June. From 18th April to 30th June means number of days is 73. So, we have to multiply the amount and the number of days. 500 into 73 means the amount is 36,000. In fourth due date is 18th July. So, base date is 18th April. So, 18th April to 18th July, we have to calculate the number of days. So, the number of days for the fourth due date is 91 days. So, 600 into 91 means 54,600. We have to total the product column and the amount column. So, total product amount is 1,45,100 and the amount column total is 3,600. Now, we have to apply in the average due date formula. So, here I have shown that average due date equal to base date plus total product divided by total amount. Base date is 18th April. Total product amount is 1,41,100 and total amount is 3,600. So, when we divide this, we get 40 days. So, 18th April plus 40 days means the total days is 58 days. So, in that 58 days, we have to less the April 30 days means the remaining day will be 28. So, that date comes under May. So, average due date is May 20th. So, like that we have to calculate the average due date. So, let me see one second example. In the sum, the due date comes under Republic Day. So, leave date. So, if the sum comes like this means how we have to calculate the due date. We are going to see this with example. So, here the following amounts are due on Elil by Satya. Satya wants to pay off on 18/3/97 or 14/7/97. Interest rate is 8%. So, due dates are here they have given. First due date is 10/1/97, amount is 1000 rupees. Second due date is 26/1/97. So, this due date falls on Republic Day. So, we have to consider what day will be the due date. Because Republic Day is a leave. So, we have to consider which day will be the due date. Amount is 2000. Next, third due date is 23/3/97. the amount is 6,000. Fourth one is 18/8/97. This day is falls on Sunday. So this day due date also comes on leave. So for this purpose also we have to calculate which day will be the due date. So determine the amount to be paid in first and the second. Let me see the sum. So here the base date is 18th April. Here we have given the 5 columns. First due date is nominal. Second due date is actual. Number of days from base date is third column. Then amount column. Fifth column is the product column. Here the due date is 10/1/97 to 10/1/97. So there are no number of days. So here amount into product is 0. Next due date is 26/1/97. So next due date is, because 26/1/97 is a Republic Day. So we have to consider the due date is the before day is a due date. So the due date will be 25/1/97. So number of days is 15. Then amount column is 2,000. So totally 30,000 will be the amount. Third one is 23/3/97 and due date is 23/3/97. So from the 18th April to 23/3/97 means the number of days will be 72. So total amount is 6,000. So 72,000 into 6,000 means 4,32,000. So next due date is 18/8/97. This day is come under Sunday. So we have to consider the due date as the previous date. So their date will be 17/8/97. So 18th April to 17/8/97 means the number of days will be 219. So totally amount will be 17,52,000. So total product amount is 22,14,000 and amount column total is 17,000. So we are going to calculate the average due date. The same thing, base date plus total product divided by total amount. Here base date is 10/1/97. The amount is 22,14,000 divided by 17,000. So totally 10/1/97 plus 130 days means totally 140 days. So how we have calculated 140 days means the day will be, so we have to take January 1, 31, February 28, March 31st and April 30 and May 20. So totally 140 days. The day falls on 25/97. So if the payment is made on 18/3/97, rebate will be allowed for unexpired time from 18/3/97 to 25/97, that is for 63 days. He has to pay the discounted value of the total amount. Discount equal to 17,000 into 8% interest. So 8 divided by 100 into, we have to calculate for 63 days. So 63 divided by 365 means the discount will be 234.74. The amount to be paid on 18/3/97 means 70,000 minus 234.74. The amount will be 16,765.26. If the payment is made on 14/7/97 means interest is to be paid from 25/2/97 to 14/7/97, that is for 55 days. Interest equal to 17,000 into 8 divided by 100 into 55 days means 55 divided by 365 equal to 204.93. Then the amount to be paid on 14/7/97 is rupees 17,000 plus 204.93 means the total amount will be 17,204.93. So from this video we have understood about the how to calculate the average due date for various transaction in various date. Thank you.